Hello, everybody. Welcome to Wednesday. The S&P 500 was down 0.03% today, so pretty much a break-even day. It was up actually quite a bit. So if you kind of go back to Friday, we started the Israel-Iran conflict on Friday. The market was down about 1.1%. Monday, Iran was talking about wanting to restart negotiations. The market jumped up almost 1%. And then, of course, yesterday it dropped based on the comments that Trump was making about full surrender and these types of things. It looks like, escalation, movements of different military equipment, towards the conflict. And then today, of course, the market was actually up in the morning and up for most of the day, actually, based on comments again that Iran was, interested in having negotiations. And so, we'll see how that plays out. But the market ended up falling by the end of the day, back down to zero anyway. Just because of what happened with the Federal Reserve. They meet Tuesday and then Wednesday of this week. They come out with their statement. There was some really interesting things in there. I mean, first of all, they're talking about, what's happening with the statement of economic projections. So they do this only once every four times a year, once a quarter. And so, compared to the last one in March, they're expecting inflation to be higher, they're expecting unemployment to be higher, and they're expecting growth to be lower. Yet they still are expecting to do two rate cuts this year, which is kind of a disconnect, in my opinion. You wouldn't think they'd want to have the same number of rate cuts, but the way the dot plot works, when they figured this out, there was basically 7 people that thought rates wouldn't change, and last in March it was only 4. But the median, which is the middle one, was still at 2. So we'll see what happens. But the market responded to that. The Federal Reserve is not going to come in and help this market. The president has been asking for rate cuts and what have you, even met with Chairman Powell. This chairman and this board is not going to increase or decrease rates while this tariff situation is happening and it's an unknown outcome, because they don't want to, go the wrong way. I do think that they'll probably go whichever direction comes first. So in other words, if unemployment comes up, which is part of their, dual mandate, they'll probably start lowering rates first to try to support that. If inflation is the thing that comes up first, they'll certainly at least sit for longer, if not raise rates. And so that's, I think that's why we're still looking at this time period, kind of August, September, October, to see, what's going to be happening, with tariffs and what's happening with the economy at that point in time and such too. So, this is markets on its own. I mean, Fed Chairman Powell has his position until 2026. He could be replaced theoretically, although it would probably be a really big deal to the market. It would be a bad move, in my opinion, but you never know what might happen. But even in 2026, probably going to get somebody who's much more, in line with what Trump's thinking. Every president really wants interest rates to go down. It reduces borrowing costs. It makes the economy, grow faster and those types of things. The problem is, of course, if it creates inflation, whatever consumers gained, with lower borrowing costs, they lose with higher purchasing prices on their things. So, inflation, as we've seen, in 2022, 2023, there can be really, dramatic to the paycheck and to, the whole overall concept of what the consumer is doing. So that's going to be important. We'll see how that plays out. I suspect, though, that it won't be the Fed that comes in and saves the market, because they're going to be sitting back waiting for things to happen. In terms of the conflict that's happening, with Iran and Israel, you go back to Kuwait, Afghanistan, Iraq, all of these different conflicts at Ukraine. Every single time the market drops at the beginning of those and then comes up after a while. So now that could change. I think it drops at least partly because we don't really know where it's going to end up, right? What type of situation you're going to have. But the reason it does come back is because in the end, the conflict is finally determined to not be a massive economic impact. Now, there's a lot of other impacts that happens from these conflicts, but the market is looking at the economic impacts and how it might affect earnings. And especially in this case, say, of the S&P 500, which we talk about all the time here, is American company earnings. And so, how does the Israel-Iran situation impact earnings? The obvious answer is usually oil when you're dealing with the Middle East. We certainly saw oil jump up in Ukraine up to $130 a barrel. It's back into the 70s now. And so there was some thought it might go way higher than that. And that would really, cause problems for the world economies because it's very inflationary because oil is used for almost everything in terms of what's happening for transport and what have you of goods. So that portion is still out there. I think so far the market feels because we've only seen small moves on this, but the market feels that the economic impact won't be that great. We'll see what transpires here in terms of whether the U.S. gets involved or those types of things. Again, market probably drops on any of these things that happen, but it might not stay down for very long, and people are starting to use it as buying opportunities. So literally, we're seeing less and less drop. It reminds me of the debt ceiling argument. The first time they threatened to not do the debt ceiling, the market dropped 17%. I think we've had 7 or 8 of those since then. The last time the market dropped 3%. So, that's the same thing here. People see that buying opportunity. Now, one of these times we could have something that truly does impact the economy, and we'll see what happens there. But anyway, that's what's going on with the markets. They're doing pretty well. It's still hanging in that 6,000 point range. We kind of expected the Fed to not do anything. They came out with a bit more harsh, projections than maybe was expected, but not too far off. We'll see how that plays out. But I think, personally, I think they really are kind of stuck. They need to see something happen one way or another before they start to do, their move. So whether unemployment is going up or inflation is going up, and they can start to respond to that, both of those are doing okay at the moment. So sitting and doing nothing is pretty much what they're going to do until we start to see some movement. So anyway, look forward to being able to see you again. Unfortunately, it won't be till next Tuesday. I'm going out of town. Daughter's getting married down in Southern California, so looking forward to that. And we'll be back, and then I'll do a video again on Tuesday, and we'll get the show going again, next week also. So I look forward to seeing you then. Thank you very much.